What is impossible? 150 years ago, this was impossible. 120 years ago, this was impossible. And 70 years ago, this was impossible. By 2050, our planet will be home to 9 billion people. And feeding everyone may seem impossible, but that's just because it hasn't been done yet. At Mosaic, helping the world grow the food it needs isn't just our job, it's our mission. Roughly half the world's crop yields depend on fertilizers. And like the scientists, engineers, and innovators before us, we believe new technologies can solve old problems. Our diverse team of talented people around the world is helping us feed the world by approaching old challenges in new ways, enhancing soil and crop health, pioneering new ways to help plants thrive in stressful conditions, enabling farmers with digital access to agriculture products, sustainable practices, and insights from around the world, deepening our commitment to protecting the environment, creating biologicals that enable plants to pull nitrogen directly from the atmosphere, slow climate change, and promote sustainable farming, fortifying our supply chain, and strengthening our ability to get fertilizer to farmers, automating our operations, manufacturing safer and faster, and finding efficiencies to help make food more abundant. We're even helping farmers grow more food with less fertilizer. With the world's population soon to reach 9 billion, Mosaic does more than imagine an impossible future. We design it, engineer it, and build it. So, what is impossible? It's just something that hasn't been done yet. Mosaic. We help the world grow the food it needs.
Afternoon, everyone. For our panel here this afternoon, we're going to be talking mixed messages, tight margins, and a strong land market with the guys from Farmers National Company. We'll be visiting with Kyle Nelson, Darwin Thuy, and Scott Huether. First of all, Kyle, just give us a little background on yourself, and we'll just go right down the line.
I'm an appraiser, farm manager, and a real estate sales, so I get all sides of it, and I work out of Fargo.
Darwin Thuy here. I'm in kind of in central Minnesota and manage farms and sell real estate, and real estate broker in Minnesota, real estate sales in South Dakota. So kind of in west central Minnesota and eastern South Dakota.
Okay. And I'm Scott Hitter. I do farm management, real estate sales, based out of Lisbon, North Dakota. Been there my whole life. I manage farms from basically Summit, South Dakota to northwestern North Dakota. So get to see quite a bit of area.
All right, let's just get started here. We've talked about, we've heard even on the market panel, the importance of the land. Let's talk about how would you characterize the land market at this point in time?
I'm calling it resilient. That's the word on the tip of my tongue this year. Basically, I would say it's defying logic in terms of the fundamentals. You know, we've got higher interest rates, lower commodity prices than we've seen in quite some time, but we're still seeing land prices that are, you know, at or near record highs. A year ago, I was up here and I basically said we're at a plateau, and I was wrong. So we had a number of sales that exceeded that, but we're hanging in there thus far, and we'll have to see what's going forward here this fall.
Darwin?
Yeah, I'd say the same thing. I mean, it's they're steady. You would think with the interest rates and commodity prices, you'd see a little bit of decline. I think on some of the land that's a little tougher ground, you know, if there's any blemishes in it, you know, if you got ditches that run through it or cattails in the middle of it somewhere, and people can't farm it fence row to fence row, it's probably taking a little bit of a hit in this market, especially if people have to borrow money. But the other, I guess what we'd call high quality A-plus farms are still bringing at least at record prices and maybe higher.
I would, you know, just to build off of what they're saying, I would totally agree with that. I would say, you know, location, scarcity, availability of the land. You know, the right parcels come up and the guys want it. From the good years we've had in the recent past, there's some liquidity there. So guys are willing to spend some money yet. I just had a farm down by Pierpont, South Dakota. We had it appraised. It was a pretty strong appraisal, I thought. And we offered it to the tenant at that, and it sold. So it was good dirt. I've got some stuff listed over in the Page area, probably not as good a quality of dirt. And you know, I think there'll be some pressure on that one to get to an appraised value. But it, you know, it's changing times here. You know, we could be having a different conversation a year from now than we are today.
Yep, exactly. Let's talk a little bit. No, we talked a little bit about farm appraisal, farm management. What are pretty much all the services that Farmers National offers?
Well, the backbone of the company is farm management, which started 100 years ago, almost 100, 95. So we have about 2 million acres under management, I think it is, across 30 states. But I do appraisals throughout, you know, the region. Real estate sales, we do handle co-op stock, crystal sugar, and ethanol stocks. Manage oil and gas interests. Do have some hunting lease network type of stuff. That's the crux. Landowner services.
Pretty much same for you guys?
Pretty much
Yeah.
same.
Yeah.
Yeah.
You mentioned, you talked about resilient land prices, and is that because we're coming off those big years of crops and good prices? Or do we still have some liquidity left yet, or what's driving that?
I think there is some liquidity left. I think the farm economy in the last, well, leading up to this past year, at least, you know, corn and soybean prices and commodities in general were higher than normal, and so there wasn't a lot of operating debt out there. People had extra money to buy equipment, put up buildings, and buy land. So they expanded their operations if they could get more land, and a lot of them paid cash. I think even just a couple of years ago, I want to say 50 or 60% of the land that I was involved in selling was paid for in cash,
Which is
without a
unusual.
banker, which is unusual.
Very unusual.
So if there's no, you know, and I think we're kind of at that point where it doesn't matter what the interest rate is if people have cash, right? So if you don't have to use a bank, then they're still able to pay,
You know,
that extra money.
to go off of that, you know, we talk about, you know, the liquidity, the income that we've had the last couple of years, but to build on that, it's also the equity. You know, you get multi-generation farms that have any amount of acres, and the acres are paid for or close to paid for. The equity they're sitting on, you know, it's easier to add a quarter of high price ground to a whole bunch of paid for ground than a first generation guy trying to actually just start out on his own. And I think we're probably heading that direction a little more all the time, where it's more challenging for the first generation guy, especially if he has to borrow. you know, interest costs are a definite impact on their ability to borrow.
My answer to that is confidence. There's just confidence that the bottom isn't going to fall out, you know, and there's wherewithal right now, so it's opportunity. What's that opportunity worth to you? So whether I got to pay $9,000 an acre or $11,000 an acre, too much either way, what the opportunity is now. So.
And that goes back to location and scarcity. You know, you don't always get to choose when the land comes for sale, but if you're in a spot to buy it and you want to.
Yeah. We went through a period too where I think a lot of farmers discouraged their children to go into agriculture. That changed here 10, 15 years ago maybe. We're starting to see a lot more of encourage them to come back. So has that changed how the price of land, or has that changed what we're doing at all?
From the perspective, if a well-heeled landowner, farmer, knows that a kid's coming back, he wants to expand his base. You know, if he's got multiple kids coming back, you know, it's natural for that farm to want to expand. You do it through two ways: either rent more ground or buy more ground. And you know, the preferred method, obviously, if they can, is to buy it, because then you have control of it.
I see in areas where there are more young farmers coming up, the land market tends to be stronger there right now, and that's where I'm seeing it. Where there's not that next generation, perhaps the opposite.
It was really ironic to how many kids that went away from the farm to get a job in the city came back to farm when corn was $7.
Yeah.
It was a little sexier then. You know, it's like, hey, maybe that isn't so bad.
Or they, like in some cases too, where they went to the city, had a big job, got a nice retirement, all that, and then came back.
And then came back, right. Yeah.
As far as absentee landowners, is that percentage changing? Is it growing? Is it less?
I think the percentage is about the same. Usually when absentee landowners have sold land, it's typically been farmers that have bought it, you know, when they do decide to sell. So if anything, the percentage of absentee landowners is decreasing as they tend to sell. And frankly, we've got a lot of absentee landowners that are maybe the second generation landowners that are now into their late retirement years, and they might be 70, 80 years old, and they're getting ready to transition that land to the kids. So if kids don't have, if they don't have that same care and concern about the land that their parents did, they look at how much the land is worth and decide, and then there might be 4 kids, so you look at the income, and sometimes it doesn't make sense for the kids to keep it. So we're coming in a period of time where there might be more land sales from that next generation than there has been in the past.
That as the boomer generation starts to retire.
Right. Yeah.
Have you seen, I'm assuming you haven't, but any weak sales or no sales? Is there such a thing?
Yeah, there is. You know, it's they always say what happens in Iowa and Illinois and Indiana eventually gets to us. You know, I think the first half of 24, there's been considerably more no sales in Iowa than we have seen, or they have seen. So, you know, I'm not saying for sure it'll come this way, but you know, if it is a down market, you know, there's more pressure on, can we get to what is the appraised value, what is the fair value, what should I sell and when should I hold?
What causes that? I mean, is it just people just holding back because they can't get the funds, or is it that the landowner says, no, I need this out of it?
Expectations. You know, some people have more realistic than others. And I you know, in Iowa, you're talking, I think the no sales, largely what you're talking are $15,000, $20,000+ an acre, at least expectations. So, you know, once that's not there, you know, and certainly when you talk, if you are borrowing money, I mean, that's more cash to have on hand. It's more likely you're going to be borrowing some money, and 6-7% on that much more money is that much more money. So I think that's a big part of it there.
Expectation is a huge part of it as far as a no sale happening. You know, it's an owner. Maybe we're at the peak and they still want that peak, but we're past it. And is it 10%, 15%? You know, the time will tell.
We are looking for a Jesse on the grounds. We have found Jim, and he is looking for his dad. Jesse,
think the other thing that we've seen in the past is when people do an appraisal, so let's say they need to do an appraisal to establish a basis for selling the farm. The land market was increasing 20 to 25% every year, over year. And so by the time Kyle, as an appraiser, goes out and appraises a farm, by the time that appraisal's done and the kids decide or somebody decides to sell it, the land has gone up in value. So when the bids start coming in, all of a sudden the bids are higher than the appraisal, and everybody goes, wow, that feels good. We might be getting to a point where that's, if the appraised value is based on past sales and it may be at the same level, if the land doesn't get to that appraisal, then people just psychologically think that it's a bad price.
In essence, it's probably not. It's more of just a flat or a stagnant.
Yeah, even though it's the market tells you what it's worth when you sell it. The timing could be different. So,
what is the most preferred way to sell a piece of property, a piece of land?
Depends on what it is, where it is, and what time it is. I mean,
Yep.
obviously lately, auction is, most often than not the way to go. I mean, when you have a number of buyers, it's fair. Everyone has a chance. With our technology tools online, we have different options, online only, live and online, so on and so forth. But obviously, by definition, an auction, you need more than one person that really wants it. So as we transition to maybe fewer buyers, we look at other modes. And certainly for me, it's a neighborhood decision in terms of what type of auction to use. There's just some. When you think about it, auctions in this area for farmland are a relatively new thing. Really within the last 15 years. It was pretty uncommon before that. Other areas you get into, northeast South Dakota, where Darwin is from, it's been commonplace for decades. It's just accepted. So you still have little pockets where they just don't really receive an auction maybe very well, or, you have a live event at a local community center.
Attention, Big Iron. We are looking for Jesse, who is the father of Jim. Jim is a lost child. We have him. So if you're looking for him, please come to Butler Arena or Uncle Chad. Thank you.
There's just
Uncle Craig, please come to Butler Arena. Thank you.
there's some neighborhoods that I'm just not optimistic if I have just one piece of land. I'm not sure the real serious bidders are actually going to show up to bid in person anyway. I think they're going to be online. In the fall, potentially during harvest, they can do it from their combine or tractor or whatever. So, go ahead, you guys have
A couple things. I do some representation on the buyer side also, and guys I work with, they absolutely say, no, we're not interested in buying off an auction, and they would prefer private sales, and that's just their thought process, and I work with that. But one of the things Darwin had brought up to me a while back was what we see has been interesting is a seller's premium versus a buyer's premium on farmland, and in what direction it's going, and in just the impact it has on the actual sale price of the land.
Go expound on that a little bit.
Go ahead, Darwin. Yeah.
Well, so back in the day when you did an auction, the seller paid the commission.
Yeah.
Okay. And now, so let's say you have kids that grew up on the farm, moved to California, and they inherit the farm. They really don't know farming, but they want to sell the farm. And you might have a land broker that comes and says, well, we're not going to charge any commission. We'll have the buyer pay it. It's called buyer's premium. So there's some changing of the guard, if you will, in that market, it seems like, where there's more buyer's premiums being offered in an auction where the sellers are asking the buyers to pay it, or at least share it in that cost. I think the end result, if you're in this business, the end result is that the net income to the seller is about the same, because the buyers are either being regulated by their banker, telling them how much they can pay, or they've got their calculator out trying to figure out, okay, I have to add 4 or 5% onto this bid because I'm paying the commission. So the buying public is pretty smart.
That's what I was going to say. It almost seemed like it would limit the buyer's price that he could pay because of that.
Right, right.
Absolutely.
The only other difference between selling, I mean, you asked what's the best way to sell is, we used to sell, we'd put a price on the land and say it's $1 million. And then you'd offer it to sale, and then somebody would be interested and they'd come and make an offer. Well, when you put a price on, it's kind of like selling a house. You put a price on it, the person making the offer comes up with the terms. They say, okay, well, I'll give you, I'm not going to give you $1 million, I'll give you 900,000, and we have to do this, and we want to do this, and we want an auction. You say we're going to have an auction on a certain day. It's sold as is, where is, we're going to close on a certain date. And so the seller gets to determine the terms versus the buyer bringing the terms that have to be agreed on by the seller. So those are the two major differences in how you sell the land.
Does it, as far as the price you get, I suppose you get anomalies here and there where one type of sale outsells another?
Certainly, we've seen it in the last couple of years. We've just had, like last year, the word I used was chaotic, because you got so much, you got strong demand and you've got motivations that you can't even predict or understand, leading to random, chaotic results.
And then you mentioned the technology side of that too. How has that changed your jobs? What, has that changed how farmers trade hands?
Well, we don't want to have an auction sale at a steel community building in the middle of nowhere that doesn't have Wi-Fi.
Yeah.
For example.
Both on the marketing side and the bidding side is totally changed. You go from a local who can make it, and that impacted some of the best selling times also. Before we had all the internet, you needed to pick a time when everybody could be there, or as many people could be there. So you had to watch your timing there. But as far as marketing now, with the web and everything else, we can market globally, essentially, all the time. And in bidding, you rarely have just a live auction without internet bidding anymore. It's not gone 100%, but boy, if you can have somebody sitting there in his office versus having to show up, he's two things: he's likely to bid, and he's likely to bid more.
I said before, this hasn't traditionally been an auction area, and you still have certainly neighbors just don't want to bid against each other face to face. And I've certainly sold land to somebody. They were in their tractor or combine, and I remember asking, this was a couple years ago, and this person was in agribusiness. They sold seed or something on the side, and said, I would not have been there. I would not have shown up to bid live if I had to be there. So, that for the seller, that certainly opens up more possibilities and a more true result. You don't have the less chance of collusion, or, people are willing to bid up to what they're willing to bid up to, not I don't want to, that person is interested, I don't want to.
Don't want to upset the neighbor.
Ultimately, you want a true result. You don't want games, and, the technology gets us farther to that end.
Does the vetting process of those online bidders get pretty complicated or not?
I wouldn't say complicated. When we have an online auction, they register, and somebody that's a question mark. Why is this random person from, San Luis Obispo, California? So we do some vetting there. But really, it comes down to neighborhood and what's customary in the neighborhood. Like, for example, our live auctions around here, ourselves and our competitors, nobody really goes through a vetting process, like requiring an earnest money or money to bid or whatnot, because you want to promote as much participation as possible. Because certainly, I know absolutely people that end up buying a piece of land, they didn't go there anticipating doing that, and just did it. But until it becomes, it can become a problem. But.
Yeah, what we typically see is, the primary buyer is still the local farmer on a lot of the sales. If it's an outside farmer or an investor, they're doing a pile of due diligence before that auction. They're in communication with the listing agent or the brokerage, getting as much information as they can to come up with the bid that they're going to do. So there's not a lot of unknowns. Knock on wood, it's been a pretty straightforward industry so far.
I was just curious, because all of a sudden you come up with somebody that gets this piece of property, and all of a sudden a day later, or even the same day, can't come up with the down money, that type of thing.
Well, that's the caveat really is that on most farm transactions, will require a 10% down payment.
Yeah.
So if somebody's buying a farm that's $1.5 million, they got to write a check for $150,000, and not everybody can do that. So I mean,
Yep.
usually, like Scott said, we're usually in communication with the people during that process. So it's pretty rare that you get surprised. If you have a live auction, I suppose somebody could wander in and start bidding that you have never heard of or seen or talked to, which would send some red flags up, and you'd probably need to go, okay, where'd this person come from?
It has happened,
Yeah.
but it's so
It's
few
pretty
and far
rare.
between that it's not a significant.
Yeah, we always say we want the Hatfields and McCoys to show up at the same time. And the land is right between their two farms.
And that would be what I would call an anomaly. And we've had maybe more of those in the last 12 to 18 months. And I think people, when you talk about being resilient or the market steady, I think you have to throw some of those results out instead of thinking that those are the norm. And it went, like, even last spring, we had some of those. They weren't necessarily that situation, but they were, we'll find out that those were anomalies, and I think we just really have to realize that. And if you take those out of the equation, we're probably gonna be much more like this.
Does, like, all of a sudden you hear about this astronomical price being paid in Iowa, does that change, like, what the sellers are expecting? It goes back to expectations again.
It probably makes them wish they had land in Iowa.
I don't feel that reaches here, but I certainly dealt with, selling land around here, and somebody says, wow, land by, Hutchinson is selling for this, which is 5 hours away from here.
So what I have seen is guys in Western Iowa, and the prices are getting to the point where they're like, well, we can't afford this. So they're looking more in eastern South Dakota versus Western Iowa, and all of a sudden we have a new strong bidder, because he's considering bidding in that Iowa market versus the South Dakota market. So, he's got the resources and he's got the desire. So
Is that like what was it, like 1031 exchange or something like, or whatever, I forget the number of it, but.
1031, you're right. You're right, 1031.
1031 is, if the seller of a property is looking to purchase somewhere else. I did one of those about a year ago. I had a landowner that he lives in Illinois, but he owned land in Ransom County. And we were after him to sell and sell and sell, and he just had no desire. And he finally pulled the trigger. He says, I'm ready to sell, but here's the deal. I'm buying land in Illinois for my 1031 in order to do it. Well, instead of buy low, sell high, he wanted to sell high, buy high. So it was a little interesting scenario there, but we had to make the transaction parts needed to work. And
Now, if something like that happens, do you have to work on both sides of that?
no, typically, we're going to represent one side. We're going to represent the seller primarily. Sometimes I'll represent a buyer. We can't represent both.
Yep.
Some brokerages do allow dual agency but it's not the same agent's not ever going to represent both the buyer and the seller.
I don't know. Usually, buyers of farmland are representing themselves. Usually.
Yep.
I mean, in your situation,
Right.
that's a little different, but.
In a 1031 exchange, you've got a qualified intermediary that holds the funds, makes sure the IRS boxes are all checked on both sides of the transaction, paperwork is signed. So they do a lot of that transactional things once the agreement is made.
A few years back, you heard, or even some of the stories that we were reporting on, where people were selling the farmland around fringes of cities as urban sprawl bred out, and then they would move out a little further out into the country, and then it just kept like a ripple effect. Do you see that at all, or was that a deal, or is it not?
You're talking something fairly similar to this big diversion project.
Oh, yeah.
Where the value of the land impacted was just totally inflated, and the sellers were getting big money, but they had a couple options. Pay the taxes on it, and technically, I think they had a special allowance instead of a 1031, which is a fairly short window. They did a 1033, which gave them a little more time, but they had to reinvest that funds in order to avoid the capital gains.
And that is, I think if I'm right, it's in like-kind property, right?
It's a big window. Yeah.
It'll
Rental
be
property.
income-producing property.
I've sold land before on a 1031 where they turned around and invested in apartment buildings in Chicago.
Oh.
So, rentals for rentals, basically.
You can't transfer it into a lake home for your own,
Right.
for example. Although I know, yeah.
If you used it as a rental.
Well, there you go, like you said,
VRBO.
yeah.
And don't take our advice, talk to your attorney first.
That's as much as we're gonna say.
If anybody has a question, just raise your hand, we'll get a microphone to you and ask the questions here if you feel comfortable asking questions in front of somebody. I was wondering about, we got somebody up here and a couple over here. Hang on, let's get a microphone so we get it on tape so we can hear it better. Way over here, up in front.
Oh, we got one
two.
more, couple
Yep,
over here.
Two
we
of
have,
them.
You had mentioned at the beginning you do some farm management. Could you explain to me what that means exactly?
Darwin or Scott.
Right.
Sure. So the farm management side, within our services, we have different types of leases. So farm management, basically, my job, let's say you wanted me to manage your farm for you. My job is to be your eyes and ears, basically, and your peace of mind for your farm. We go out, we negotiate rents, we keep an eye on the farm, we do farm reports, we do harvest reports. We have an in-house tool that we use. It's called a lease analysis. We put in all the incomes, all the expenses, anticipations, and we run these numbers and we look at different types of leasing, cash rent, cash plus a flex, crop share, up to full custom type farming. Even though we run those, we know for a fact if you're a cash rent guy, odds are you're not going to go custom farm. But we like to run those so we can kind of compare. But our job is to make sure that we're doing what your wishes for your farm are.
Another question.
This is to be kind of a black swan event type thing, but depending on who wins the next election, there's been talk of taxing unrealized capital gains. Just kind of a guess, what do you think that would do to land values, especially for investors that are owning land?
I don't know all the details, but I know there's some real tight specifics on the real unrealized capital gains. I'm not 100% if farmland itself is actually in that network. That'd be the very first thing that I would want to know. And then there's an exemption up to a very high number on a net worth individual. So if it's 100 million or whatever. So hopefully you're above that.
But they are talking about that as, your home equity or whatever, your business equity, a lot of those things. If they can figure out how to get more taxes from you, it would put people out of business, probably, if they had to figure out, okay, my business is now worth $2 million instead of $1 million, and I got to come up with $300,000 to pay unrealized capital gains tax.
And to build on that a little bit, a black swan on a political event. We've got 3 branches of government. Our hope is that the smart one wins at the end of the day. So
I'm an advocate of dealing with what we know, and speculation is just that. And we've all been around long enough to hear.
Yep.
I've heard all kinds of speculation. Well, really every presidential year, you start hearing things, and it's speculation.
And what's interesting is we have conversations with landowners, well, maybe I should sell before this election. And, at the end of the day, it's not unlike the previous panel, don't make rash decisions. It's do what works for your plan and worry about it if it does change.
we talked about when to sell, the timing, the technology with being the online auctions that's changed that. It used to be you always sold kind of, I would call it in the farmer's off season, either before crop or right after. Now with the technology, you sell pretty much all the time. Does a lease agreement affect that at all?
It can if it's more than a 1-year lease. If somebody leases their farm for 5 years, then you'll have to deal with that. I mean, in our lease, I mean, we have a clause in our lease that just says if the owner decides to sell, the operator agrees to terminate the lease. So it's kind of a non-issue in our world, but there's leases out there that if you just put a lease together, the operator can go, well, I've got a 5-year lease, and either it would hurt the price of the land. If the new buyer either was a farmer and then couldn't farm it until the lease ran out, or if it was an investor and you're basically handcuffed with the person that's gonna farm it. And so we typically do 1-year leases, maybe 2, but we have, like I said, we have that clause in there. Otherwise, the contract can be written subject to tenants' rights. I mean, if you're selling a farm in June, you have a clause in the contract that says subject to tenants' rights, which allows them to harvest the crop that's growing, and then the buyer can have access to it after that. So you can close and exchange money anytime you want, and then the new buyer understands that they just don't have access to the farm until harvest.
That's still a thing. I know, like, back when I was farming, if you took a piece of land over, if it was plowed, when you got it, you plowed it at the end of it. Is that still an issue or
That's still a thing, yeah.
You know, the main thing is to have it spelled out in writing.
Yeah.
It is a factor. I find it less of a factor today. I mean, like, let's say they don't owe back fall tillage. It's, you know, people want to maybe fall till it the way they want to fall till it anyway. So
if a guy's spending what he feels is too much for the ground anyways, $5,000 an acre, if it's a $20 tillage pass, at the end of the day, he's going to bid what it's going to take to get it if he wants it.
Yeah.
Okay, with that then, is there a difference between ground that's been no-tilled or minimum tilled versus conventional till?
Depends, you know, I would change that up a little bit. I would say that if it's not worked to the norm in the region, does it impact it? You know, in the valley, we don't have no-till in the valley. You know, if there was a piece of ground that been no-till forever and all the neighbors are driving by it and they see, he's not doing a very good job. If it's for sale, they're going to look at that. They're going to say, okay, he hasn't been farming the way we have. Has he been doing the nutrients the way we have? What are the differences from the norm? You know, that might have an impact, but you know, depending on the region, I would say is more important than whether it's no-till or minimum till or things like that.
organic would be the thing that would come, you know, people ask, is worth more certified organic? We don't have enough certified organic growers. And actually, we had some a couple of years ago where I think we had, one was on each side of the river, and I think in one of the cases, it probably hurt the land. There was a concern over fertility levels.
Yeah, Kyle brings it up right there. The big thing in my mind, no-till in our region, we can't afford to bring in the fertilizers, no-till type fertilizers. It's just the transportation is too much. So something's getting skimped on there.
So at that point then, do you see some of these new proposed regulations maybe directing farmers toward more of that no-till? Since they're all doing it, would that keep the land prices about the same then or not?
If you're talking like for carbon credits, things like that, I don't think we're at a point yet where the carbon credit payment is enough to get a farmer to totally drastically change. He's going to look at, okay, if I have a menu of things I can do to get a portion of this carbon payment, depending on how it's structured, he might say, okay, I'll do reduced till, but I'm not doing no-till, or I'll do strip till, but I'm not doing no-till, or you know, maybe I'll just leave the hills. I'll do something to get as much as I can that makes economic sense, but I'm not going to forfeit my yield for a smaller carbon payment.
Cash rents. Let's talk about some of the rental agreements and cash rents. Are you seeing those change at all?
You know, the big question is, in my mind, is where are you currently at? I mean, if you're always pushing the top of the market and you're chasing the high dollar rent all the time, with the crop prices the way they are today, you're probably going to get some pressure from your tenants to lower the price in the markets when they go down. A lot of times what we'll do is we'll have a base rent that we set that's a fair return for the owner, and then have a flex or some kind of a bonus clause in our leases. So if the prices go up during the year, then you get a payment, get a spring payment for the base rent and then a fall payment as a bonus. So the hardest thing about leasing farm ground is negotiating what the rent should be next year in November before the crop is planted in May. So nobody really knows if is it going to rain? Is it going to be too wet? So the farmers are always trying to go, well, we don't know, and so we're trying to negotiate lower. The owners are going, the taxes are going up, and the costs are going up. So it's hard to come to that sweet spot.
To get a little more specific, let's talk, what are our yields this year? As I drive around this region, there's some spots that were too wet in the spring, and if they got planted, odds are some of it got replanted. It was a struggle, but boy, you get west here, there's some beautiful looking crops coming. So I think some of those bushels are going to help offset where the prices are. Probably not replace it, but the overall net for that farm is, at the end of the day, he's going to say, well, I had a little breathing room. He's more likely to not argue too terrible much. Okay, you got to keep an eye on this. Let's maintain it if it isn't out of line to start with. But in regions where they have below average yields this year, there's a big equity burn going on, and there could be some tough conversations either started by the farmer or by the farmer's lender, right, as far as the rental rates.
There's two components. There's economics, supply and demand. So
yep,
you balance the two. I mean, the economics might say it should be here. Supply and demand might add whatever percent or whatever.
So since this morning, I've been sitting in the booth over in the livestock barn, whatever. I've had three farms that I know asking if there's any ground for rent. So there's a couple ads in the paper. There's always interest out there, and some of it goes back to is the kid coming back to farm? But it every once in a while I scratch my head. What pencil are they using to run their number, because it's a little different than the pencil I'm running.
Yeah.
But it
What about improved ground? Somebody that's got maybe more of a not the top piece of ground in an area, but maybe a little bit less, but it's been tiled or improved. Does that matter as far as lease amounts or value?
I think it just comes back to what's the farm yield? What's the proven yield on that farm? I mean, you can only pay so much rent if you're not going to get above 100 bushel corn. I mean, and so no matter what part of the country you're in, the farm has to yield a certain number of bushels before you can justify what rent you're going to pay.
And again, it's fun for me because I get to do management in so many different regions. I've got some prairie pothole region, and then I've got some stuff in north central North Dakota, and you get into alkali grounds, and they're renting a whole quarter. We're renting a whole quarter. The farm's renting it, but what's he producing on it? He's got to know what's going on out there, and it's no benefit to us to overcharge where he has no opportunity to make money. There's just that doesn't work.
The word I use in evaluating is consistency. Because certainly some, and a lot of times that comes down to drainage, but some farms can produce way up here, and then the next year it's down there based on weather variable. I mean, that's just obviously hard to manage.
Yep.
But if it's right there all the time.
Yep. Back to the tiling, you get ground that can consistently perform. That's good to have in a portfolio if you're the farmer.
Yep. Kind of the same thing then with irrigation, some of the irrigated ground.
Yep.
Yeah, we don't have. That's the thing. In this region, we have pretty small pockets of irrigation. Yeah. So that is that's a very unique.
Yep.
Thing. Really the only. I was talking to Darwin about this farm he manages had one irrigated parcel on it, and generally speaking, I don't see where that is worth any more than the best non-irrigated ground in that area. Now, the exception is potatoes. If you get, obviously we have a few potato producing pockets, and if that's below sand irrigation, which is what the potato growers want for uniform size, that usually will send you in a whole different world. So,
And that led right to almost my next question was, does cropping pattern, crops that you grow make a difference in value, whether it's sugar beets or potatoes, Corn.
Well, to me, that's a neighborhood thing, but, you know, yeah, I mean, that's why in the northern Red River Valley, you know, when I started this 20-some years ago, the high points of the value of land in the region here was southern Red River Valley and northern Red River Valley, pretty much because of sugar beets. But now I would say the northern Red River Valley at $15,000 to $18,000, $19,000 an acre, which is saying a number. We don't see that in southern Red River Valley. So what are they growing up there that they aren't growing in the southern Red River Valley? Potatoes, vegetable beans. You can grow edibles down south, but they're more up north. So, I mean, it's not corn up there that's driving that. So there's a case where, you know, crops are dictating things. And that's the whole reason why we've seen an influx, you know, in some of these areas outside of the Red River Valley, is corn. I mean, I do a lot of appraisal work in Dickey, Lemoore, Sargent County, and I mean, when I started, you could buy all the land you wanted around there for $500-600 an acre. And as they've grown more corn, and it's not just there, it's other areas, Stutsman County, wherever you want to talk about. I mean, it's just, well, Emmons County, you know, south of Bismarck. I first did an appraisal out there 10, 12 years ago. There was only a handful of growers raising corn. I mean, we've literally seen those values jump from a couple $1,000s an acre to over $6,000 an acre just in the last 2 or 3 years. And just as out there this summer, you hardly see any small grains. It's soybeans, it's corn. So that's clearly crop rotation is what's driving that.
Sure. So then the recent dip in commodity prices, do you see a change there then?
I don't think you're going to see major shifts. You know, farmers are optimistic. You know, maybe we'll see a bump, but you know, the previous panel talking 25 cent in corn and 50 cent in beans, so that's not a very big bump. But you know, what guys might look at short term next year, you know, what can I raise and make money on that I don't have to put a pile of money into it? You know, would they look at a canola? Something like that. I don't think we'll see a major shift in acres, but there could be bumps in crops, different.
What about farm program payments and those types of things? That influence some of the payments at all or not?
I think it's in this area, usually a non-factor.
Are you talking the normal payment or the ad hoc payment?
I would say, well, yeah, exactly.
Yeah,
Both
I'm
actually.
talking normal.
Yeah.
I'm talking normal.
Normal, yeah.
Yeah.
You know, because as an appraiser, going 20 years ago, we try to get the base acres and yields on a farm and what those crops are and what those, and I remember have in our boilerplate for appraisals, we used to have a statement in there about that they're higher, they're lower, and if they were just really low, you know, it might affect the value. And I got to say, I've come across some that we've even sold that they're not good, you know, or they don't have a corn base or something. I literally can't remember anyone bringing it up as a concern as far as a buyer.
I would say you almost have to add on to that question. Are you talking on the owned ground or the rented ground of that farm? Because I know if I was the farmer, I'll guarantee you I'm taking care of my own ground as good or better than I am of any other ground. So my APH is always going to be good on my own ground, and that will lead into a little bit difference in the payments.
Okay. Switch gears here. Talk about some of the, you guys handle some, I know Kyle, you do talk about sugar beet stock and some of the corn plant stocks and those types of things, ethanol plants. What's been happening there?
Well, none of us deal directly with that, but I do talk to our folks that deal with that and others. But, you know, really right now on the sugar beets, there's a year ago, the Big Iron, we had some sales already, which is unusual. Right now, to my knowledge, we haven't had any sales. I see somebody's got a few listed at $58.50, which is kind of where they ended up last year. Might have had a few sales at $6,000. This is American Crystal stock, by the way, per share. So right now it's kind of wait and see. I would anticipate that, you know, they're certainly going to, I mean, that is looking to be an extremely profitable crop right now, the breadwinner for the Red River Valley. So I think undoubtedly there's going to be demand. It's just whether somebody's willing to, you know, right now probably nobody is willing to put them out there for sale, but, you know, somebody gets a liquidity issue, maybe some come for sale. Ethanol and if ethanol is the main one, there again, if there's demand, pretty much supply and demand is kind of in flux, and, you know, there's not a lot of supply, so that's kind of where that sits.
Are you expecting an increase in value around the new soybean processing plants that are moving in?
Value in the real estate
Yeah,
farm?
yeah.
You know, that's a good question. I haven't seen it, and I'd be skeptical that it does. I just in general on those things, even, you know, when these dairy farms have moved in. And I manage some land around one of them, and the financial benefit to the farmer and the landlord is, to me, significant in the case that I've seen. But I've not yet seen that translate into land value. It's just not, it comes down to what the buyers, and in some areas, maybe it does. But here, I haven't seen it.
You know, in a small, tight radius around a new development, a dairy, the impact could be greater. You're talking bigger dollar differences than the soybean plant or an ethanol plant. You know, you're talking basis and things like that. A little bit, that'll get absorbed more than anything. But the dairies, you know, you get both the fertilizers or the manure and possibly selling your feedstocks to them. So there's a big potential swing on the acres that get contracted with the actual dairy.
Yeah, or even what's growing, I suppose, right around that. It probably tend to lean more toward corn and maybe alfalfa, I suppose.
Yeah.
Randy, I think I
Yes.
got a quick question.
Okay, yeah.
Kyle, I've read a lot of your appraisals and you do great work. I'm really curious about, as ag real estate experts and in your kind of industries and other areas, capitalization rates. Are there any pockets where I'm seeing interest rates go up, but cap rates go down? And usually you would see some type of correction somewhere. Is that what you're seeing in the markets? Or like, I'm thinking pockets like Wyoming seeing that and other areas so we can maybe get ahead of the curve because it's,
Pockets, well, in general, I mean, cash rents did not keep up with land values here in this last run-up. So the cap rates generally lost, I would say, 1%, maybe even more. You know, when you talk about pockets, that's just a function of rent versus value. I can think of, you know, I think everywhere there's a low cap right now, but I guess not to directly answer your question, but the angle to that I often get asked is where is there a good deal on land? And my answer to that for 20 years has been Steele County in North Dakota, for example. You know, because
that's because Finley's got a
the
good
rents
cafe.
were strong relative to value. Now that's changed somewhat, but still holds true. I mean, to some extent. But yeah, there's less of that disparity. It's probably more inverse. Like I mentioned, Emmons County. You do not have rents in Emmons County that support $6,000 an acre land to an investor. I mean, you're talking a lot of $60, $70 rent probably, maybe 100. So there's going to be, that's kind of the opposite to your point. And, you know, yeah, you know, it's just, so there's probably not too many high cap rate areas in this area that I can think of that, you know, an investor might, unless they're, you know, they're just getting above market rent. And there's certainly areas where you're more likely to find above market rent. You know, certainly, well, anywhere in Red River Valley, because sometimes you know, you get the perception that every acre of Red River Valley land is the best there is, and, you know, it's not the case.
Any other questions from the audience? We'll start to wrap things up. I'm sure there's some questions you might want to ask privately to one of our three panelists, but any further questions at all? Just kind of give where you see the farm economy, just kind of give us, look into your crystal ball. What do you see land prices doing?
I think the key is, I mean, commodity prices obviously have an influence, or should, but the biggest key to me is the supply that's out there in a given area. If there ends up being a ton of land put on the market due to fears or concerns over whatever, or just wanting to catch the peak, then not sure we have enough buyers to catch all that. But, you know, that to me, that's the key, you know, that will make us stray from a relatively steady flow.
Yeah, I think it depends on how long too. I mean, if the commodity prices are, it's a quick dip and then back up, that'll help stabilize things going forward. If it you know goes, if corn goes from $3.50 to $2 or 2.50, that's gonna start the trend going the other way too. So, and interest rates again are, I think there's some pressure on those. They seem to be coming down a little bit, but they're not down to where they were a couple of years ago. You're at 7-8% versus 2 or 3. All that stuff is gonna burn through capital in a hurry in the day-to-day farming operations of the farmer. And so the more money they have to burn up planting and harvesting a crop, the less they're going to have to spend on farmland and pay rents and different things like that too. So, in my opinion.
Yeah, I totally agree with these guys. It's a function of income and expenses, and built in right now, whether we like it or not, is interest is coming back in. I think we have some more variables as far as the haves and the have-nots. There's been guys, everybody's had a good couple of years with the ad hoc payments, good prices, good yields. A lot of folks had some problems marketing the 23 crop. And I think when they got to rewrite their balance sheet, both on used equipment and if they've still got inventory, the balance sheet is always it's gonna look different really fast. If we happen to stay low in our commodities for two marketing cycles, I call it, then we're gonna have a real impact on the downside. What happens if you get into the next season, our insurance coverages are based on a lower price then, so our protections are down as well. But that's worst case scenario. Worst case scenarios, they can happen. It's usually not as bad as you think. But there's optimism out there, but guys are burning through equity right now, and it's going to be a factor of how long that takes until we can start getting back into a good income window.
Got a question right down here.
The question was about eliminating property taxes in North Dakota and what that effect that might have on land values. I said earlier we were talking about possibilities of I don't worry too much about speculation. I deal with what we know now. So,
without getting into whether that passes or not, take a look at the Red River, Minnesota property tax versus North Dakota property tax. What's the land sell for in Minnesota compared to North Dakota? It isn't an exact correlation, but it gives you an idea.
Historically, it'll sell a little more on the North Dakota side than right across, just because of tax structure. Usually you might have half the taxes on the North Dakota side as the Minnesota side, maybe.
When a guy's looking at a piece of ground, it's what's it worth? What can I make off of it? If it's less expense, because there's no property tax, he will value that a little bit more. Is it a huge number? I don't think so.
Already we have that with, I was talking with somebody yesterday, an investor I deal with or whatever. They're in North Dakota. They're not even going to look at anything in Minnesota. It doesn't matter how good of a deal it is.
Yep.
Not going to consider it. So we already have a little bit of that. Well, we don't deal with apartment buildings, so I would assume, it's gonna, increase the value.
The ROI would be higher for sure. The return on investment would be higher if you didn't have to pay the taxes. But for everything they give, they'll take something back. So I mean, you might get rid of the taxes, but then you'll turn around and there'll be another bill passed where you're going to come back and feed something else, because there's only so much. There's a certain expense that has to get paid, and there's a certain amount of money that has to be generated to pay it. So
Just
I
like
think.
South Dakota, there's no,
No state income tax.
yeah, but I do an appraisal for a South Dakota client, guess what? I gotta charge them sales tax.
Right.
You know, or you gotta get the money from somewhere.
Yeah. Pheasant hunting, that's where they get their money.
All right, let's give our panel a round of applause here this afternoon. Great conversation, guys. Kyle, Darwin, Scott, are you guys going to be able to hang around in case somebody has some questions? And if not, where are you located at?
The beef barn over there.
Okay, that
We're
one.
out of beef though.
Yep. All right, well, thank you, guys.
What is impossible? 150 years ago, this was impossible. 120 years ago, this was impossible. And 70 years ago, this was impossible. By 2050, our planet will be home to 9 billion people. And feeding everyone may seem impossible, but that's just because it hasn't been done yet. At Mosaic, helping the world grow the food it needs isn't just our job, it's our mission. Roughly half the world's crop yields depend on fertilizers. And like the scientists, engineers, and innovators before us, we believe new technologies can solve old problems. Our diverse team of talented people around the world is helping us feed the world by approaching old challenges in new ways, enhancing soil and crop health, pioneering new ways to help plants thrive in stressful conditions, enabling farmers with digital access to agriculture products, sustainable practices, and insights from around the world, deepening our commitment to protecting the environment, creating biologicals that enable plants to pull nitrogen directly from the atmosphere, slow climate change, and promote sustainable farming, fortifying our supply chain, and strengthening our ability to get fertilizer to farmers, automating our operations, manufacturing safer and faster, and finding efficiencies to help make food more abundant. We're even helping farmers grow more food with less fertilizer. With the world's population soon to reach 9 billion, Mosaic does more than imagine an impossible future. We design it, engineer it, and build it. So, what is impossible? It's just something that hasn't been done yet. Mosaic. We help the world grow the food it needs.